Sirius XM is getting a lot of investor attention because the legendary investor Warren Buffett has purchased this stock. And so, as is usual, when Warren Buffett purchases a stock or shows interest in a stock, it gains a lot of investor attention because of his legendary status. But I wanted to conduct my own due diligence on Sirius XM stock. I wanted to do my own discounted cash flow valuation to see if this stock is indeed undervalued, which is what Warren Buffett looks for in an investment. And so let's take a look. Let's get started. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so here I have my discounted cash flow valuation model for Sirius XM stock. As you can see, it's populated with several estimates and assumptions and inputs to make this calculation. And let me share with you where I'm getting one of my inputs, which is the free cash flow estimates for 2024 to 2028. I'm getting that from ticker.com. And here they have the Wall Street analyst estimates for the future free cash flow expected for Sirius XM Holdings. In 2024, that number is expected at 1.02 billion to increase to 1.16 billion in 2025 and increase further still to 1.39 billion in 2026, 1.46 billion in 2027, and 1.62 billion for 2028. As you can see, those numbers have already been populated in my valuation model here. The rest of the inputs I'm utilizing are from Yahoo Finance. These numbers include the beta, the company's market cap, total debt, cash and equivalence balance. These numbers have all been derived from Yahoo Finance. I've even included the link here where I have the beta so that investors can follow along if they have access to this spreadsheet here. So the company's market cap at 7.228 billion is smaller than the total debt at 10.73 billion, which is an interesting example. I haven't come across too many companies that have total debt that's higher than the market capitalization. So that's already an interesting facet of Sirius XM as a business. But let's go back to the free cash flow forecasts. Between 2024 and 2028, the Wall Street analyst estimates for free cash flow growth have the company growing at 12.3% compound annual growth rate. Between 2029 and 2034, I'm going to forecast the company's free cash flow slows down and grows at a 6.1.5% rate. And then from 2035 onward, I'm going to forecast a 5% growth rate for the company's free cash flow growth. And so when we forecast all of those free cash flows out, we need to then discount them back to the present to get the present value of those cash flows. To do that, we need the weighted average cost of capital, which I have calculated at 9.14%, giving the company a cost of debt of 8.5%, with the capital asset pricing model cost of equity of 11%, a beta of 1.05, a risk-free rate of 4.75%, and a market risk premium of 6%. The debt-to-equity ratio, I'm giving them a target capital structure of 75% debt and 25% equity. I'm going to assume that SiriusXM does not want to carry this much debt in relation to its equity. I'm going to assume it's going to want to balance things out a little bit better, reduce the debt in relation to the total market cap. And so I have the debt as a percentage of 75%, even though right now it's over 100% of the total market cap. So when I discount those cash flows and bring them all back to today, I get a value of operations of 35 billion for Sirius XM. Now, when you add the cash and subtract the debt, you get a value of equity of 24.7 billion. If I divide that by the number of shares outstanding at 339 million, I get an intrinsic value per share for Sirius XM at $73. That compares well with its current market price of just $21 per share. So I can see why Warren Buffett is attracted to this stock and has been purchasing this stock. Warren Buffett has identified an undervalued investment. What's more, Warren Buffett is not afraid of a company that has a lot of debt because Warren Buffett has enough capital to buy out the company entirely and can pay off the debt and own the company outright should that opportunity arise, and that debt can be eliminated. Warren Buffett can access capital at a lower cost of debt than SiriusXM can access capital. And so by Warren Buffett owning this stock, there's an opportunity to lower the cost of capital for this business further still and generate excellent returns for Warren Buffett. Warren Buffett is also well known for not applying a cost of capital as high as everyone else does. Warren Buffett typically likes to use the rate on a government bond as the denominator in these discounting formulas. And so instead of using something like the weighted average cost of capital, Warren Buffett has been known to use, instead of the weighted average cost of capital, just the rate of return on a 10-year government bond. And if that rate of return on the 10-year government bond is lower than usual, he adjusts it higher. If it's higher than usual, he adjusts it lower. Because that's how he sees it. He sees investing in stocks and investing in government bonds as the two choices. And he says, well, my opportunity cost of capital is whatever I can get by parking my money in a government bond. So either I'm going to park my money in a government bond or I'm going to buy this stock. So that's why he utilizes the rate of return on a government bond as the cost of capital instead of this higher weighted average cost of capital that most others, including myself, utilize when we're evaluating stocks. So in conclusion, is SiriusXM undervalued? According to my calculation, it is undervalued. And even if I apply a wide margin of safety, it is still undervalued. However, that doesn't mean that the stock price will automatically rise just because I think it's undervalued or just because Warren Buffett thinks it's undervalued. The market can disagree with my calculation forever, and the price could remain undervalued or what I perceive as undervalued forever. So I recommend doing your own due diligence and don't expect that the stock price will automatically go higher just because I've calculated it as being undervalued. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.